Let's get to one of your calls straight out the gate. Sell calls on gold. Why, Anastasia?
Yeah, gold has been a phenomenal asset to hold, of course, over the last 6 months, over last year. And when you think about why we wanted to hold gold, is because we had this expectation that real rates are going to move much lower. So that's what's played out over the last 6 months. Now we're looking at U.S. real yields around -1%. So part of the reason why that's happened is because the inflation break-evens here in the last 3 or 4 months have moved materially higher, while the nominal yields have actually stayed pretty well contained. The break-evens went from 60 basis points to 165 basis points. And I think at this point, at these levels, we don't see that much more to the move. So the point is, we've seen this massive move lower in real yields, but I just don't think we're going to see that much more. So we expect to see some stabilization in real yields. And at these levels of gold, I would say they're reflecting the reality of a very negative real yield environment. So this is not to say that we shouldn't hold gold in the portfolios, and we do it. I think it's more of a neutral stance, because the reality is we never know where the expected risks are going to come and where from. But the predicted catalysts for gold, I would say, have largely played out. So that's why I keep the position, keep it as neutral, but sell gold calls, because when you look at the volatility on some of those calls, it's actually picked up because of the demand and the upside chasing of gold. So we take the other side of that, and we will be selling some of the top side and monetizing it and getting what we think is pretty rich premium here.